Completed booking an entire year of food truck operations, and now we're ready to run reports such as balance sheet and profit and loss statement in order to prepare documentation for tax reporting. Meanwhile, we'd like to announce that finally, as you guys requested, we are releasing the workbook with all the invoices, all the bank statements, and all this wonderful additional information that we use during our simulation is now available to you. Right now it's available on Amazon as both a printed version and Kindle version, and I believe if you have Amazon Unlimited, you will be able to get it basically free of charge. Otherwise, there is a minimal charge. And again, if you get a printed version, which we do advise that you do, you can mark the invoices, you can mark the bank statements and credit card statements as you reconcile. So it is available on Amazon. The links to those books are currently in the description, and we will continue to release new content and new workbooks as we show new simulations. All right, so let's get going with our year-end reports. In this case, it is very similar to what we did in desktop, right? So we're going to go into our reports. Okay, the reports that we need are under accountant, right here, right? We have the balance sheet and we have profit and loss. So let's run balance sheet first. All right, we're going to run it at the end of the year, right? Again, remember, balance sheet is a snapshot in time. It doesn't show a picture over time. It's on a specific day at a specific point in time. All right, so we're going to run report. Again, we're going to set it to cash basis, but again, in our case, it will be identical. Okay, so here we are. We have our cash position, right? We know it's accurate because it reconciled. We have our fixed assets, right? And we have our total equities and liabilities, the position, right, on who owns what, right? And here's our debt with the credit card, right here. It hasn't been paid off. And, you know, we do have equity, right now. So what we'll do is we'll make adjusting journal entries end of the year. Those entries would typically be sent to you by your accountant. And after that, we'll be good to go, right? So again, here we are. What we'll do is the equipment that we purchased, we will write it off using section 179, which means we can basically, instead of depreciating it over time, we can depreciate it in the current fiscal year. And then what we'll do is we'll close the members draw, right? So we can track it starting next year or again, but right now that's the reason we booked the money that we took out of the business into members draw instead of directly into equity account, right, is to make sure that we track it during that period so we know how much money we took out. But now we will close it out into the equity account. So let's get going with that, right? So for that, again, we're going to use general journal entries, one of our favorite tools. All right, so we will go into journal entries right here, right? And again, we will date them using the end of the year transaction. All right, and what we'll do is we'll book the depreciation first, right? So depreciation expense, here it is. Again, depreciation expense, as the name implies, as an expense. Expenses go up when debited, right? So we'll take the entire cost of the equipment and we'll write it off, right? So we can mark section 179. And then here we'll have accumulated depreciation right here, all right? So here it is. Again, accumulated depreciation is technically an asset account. It's a counter asset, so assets are reduced when credited, right? And expenses go up when debited. So our expenses will go up as a result, and our assets will go down. So let's save and close and take a look. All right, save and close, right? Look at our balance sheet, right? Our equipment right here, but then accumulated appreciation offsets it, right? And we're at zero, right? Our assets, our fixed assets are now at zero, which is fine because for tax purposes, of course, for GAAP, we would do it differently. And then the only thing we have under assets would be the cash on hand and some cash in the bank, right? So, all right, let's keep going. What else do we have? Well, we also have the member draw that we got to close out, right? Because it's still hanging there. So we're going to close it out so we can take a look at, you know, our balance sheet with that thing closed into our equity account. So here we are again. We're going to use general journal entries. Here it is. It's already doing it as adjusting journal entry. Okay, so members equity, here it is. Equity is reduced when it is debited, right? We remember that. All right, and then the member draw account is also an equity account, right? It was just a holder, right? We could have closed directly into every time we took money out, we could have put it against the member's equity, but instead we, debited our members draw when we took money out just to keep track of that lump sum. But now that it's the year end, we're going to close it in, right? So here it is again. All it does, it moves amount essentially from one equity holder to another. Overall equity position didn't change, right? All we did is essentially then closed out the members draw account. But since it's an equity, and here it is, equity is increased, equity is decreased, it's a wash, but we do it for housekeeping purposes. So let's go ahead and post it. All right, so here it is, right? Members equity, and we have a negative equity, right? And it makes sense because technically, we borrowed to start the business, then we didn't end up keeping too much money in the business, right? And right now, if you look at it, our credit card, our liability is more than 4,500. Meanwhile, the cash in the bank is around 2,000, right? So the rest is our negative equity, which is not a big deal, right? Because it's very often that we would finance a startup, especially small starting business, with debt, and until we build up that equity element and keep more cash in the business, it will continue to be negative for tax purposes. Now again, for GAAP, our asset here left in the business, right, we wouldn't write it off in 1 year, and that would create that additional assets and reduce our essentially expenses for that year, and that would improve our equity position a little bit. But again, for tax purposes, this is perfectly fine, right? We posted our adjusting journal entries, we would print our balance sheet, and let's run profit and loss report so that we know how much taxes we're going to pay, or at least, what's our taxable amount. So let's go back to the reports. All right, we have it under favorite, but I still want to show where, we could find it. And again, here it is, my accountant, profit and loss, right? Okay, profit and loss is something that we run over a period of time. So we want to know during the year 2020, sometimes online version of QuickBooks likes to back out. That's fine. It has enough good features. So okay, here it is. We're going to do cash basis. In our case, it shouldn't matter. Okay, here we are, right? Here's our sales for the year. We sold over $128,000 worth of food, all right? This is all of our expenses, all right? And we have a net income, and it includes depreciation expense that we posted. We have a net income of approximately $69,000. So that's, something that would go into our Schedule C right here, right? So once you prepare these two reports, the balance sheet and the profit and loss statement, and you send it to your tax preparer or to your CPA, they will be able to complete your Schedule C, and then depending on your tax position, they would be able to post it into your Form 1040 and tell you how much taxes you got to pay. Meanwhile, again, all of these transactions, all of these categories here, right, they're summarized for that year, and then we would again post it into the expense category. The income right here, right, that's our sales. It would go right here under on Schedule C, and then individual expense categories would go into Part 2, and then our net income which would end up right here, right? Total expenses, tentative profits, right? Right here. Here it is, net profit, box 31. This will be the amount there, and then that amount would move to our form 1040, right? And we would be able to file our tax returns because, again, single member LLC, which is DeCre Food Truck, it is a disregarded entity and it doesn't have to file federal tax returns. It can stay on Schedule C of the owner. So here it is, right? We now have reports that we can send to our CPA or our tax preparer to prepare our taxes and file them. And we're good to go. Again, I want to remind you all that the workbook is available. You can now order and you can practice, follow us along on YouTube. And here's all the pages that we used. Again, we fine-tuned them. We made sure that they're good for your consumption. There are some additional cool reports that we included in some pages. Check them out. We know you'll become a much better and much knowledgeable bookkeeper and much knowledgeable business owner if you practice with this. Thank you.